It's big, it's bad, it's Milton, it's rolled through. You had Helene rule through. Uh, let's be real, brother. I'm joined by our buddy Zach Abraham, Chief Investment Officer, Bulwark Capital. This could have some implications in things like the commodity markets. And I don't think people understand that. You and I always talk about the commodity markets. There's crazy stuff out there. There's gold, there's all this stuff. There's oil, there's gas, there's natural. But the commodity markets move on rumors and they move quick. And I look at this and I think, man, I bet you wouldn't be surprised if we see gas take a little bump here, if we see some of those natural resources start to make a move.
Yeah, no, I don't think that that's incorrect at all. It could certainly do that. Where this thing touches ground, obviously, is going to have a lot to, the area, excuse me, I mean, we know where it's going to touch ground or in the areas it's already been affected. But in terms of the way it hits and the magnitude, in different areas is going to have a big part to play in it, because it could be, a storm like that could wipe out refineries and it could miss them, so it really depends on how it shakes out. But to your point, it can move a lot. And I think ironically, and this is a theory, I've got a lot of different examples of this, but it's kind of the opposite of what you'd think in this era of time where, data is being transmitted so quickly. This market has become increasingly insensitive to especially macroeconomic things. Meaning we've watched this market walk face first into, I hearken back to January of 2020. People always forget this. January of 2020, COVID was making its way around the world. Nobody knew how bad it was going to be. But it was making a lot of waves, right, on the global stage. You look over at the United States equity markets, and the S&P was up 13% in the month of January alone. Right? I've talked about the Facebook example of how Zuckerberg talked for a whole year about how they're going to spend. So we've watched this market walk into buzzsaws time and time again. I wouldn't at all be surprised if that's the case. Another one that looks really interesting to us is nat gas, meaning based on, these storms and areas they're going to impact, they could have a significant impact on nat gas because of the stresses on the grid. Looking at the new power demand that's coming online from all of these AI data centers, these companies, SpaceX, Elon Musk did this recently. He's powering the new SpaceX facility with natural gas generators, right? And so, bottom line is, when you see all of these very intense things coming online at the same time, and meanwhile, this is all during the green energy push, right? You just have incredible taxation on the grid itself. And because of that, players cannot get the power they need off the grid or traditional sources. So they're turning to nat gas and other forms of energy. And you're just going to see that continue and continue. And what's interesting is something like this, potentially, now we don't know if that's going to happen or if it's in the works, but potentially it could have a big impact on, if it ripped over and really screwed up a couple of refineries or something like that, you could have some big movements in gas markets, nat gas markets, oil markets. And just because the market, usually you look for the market to give you clues like, well, the market seems calm about it. This market's proven time and time again that it's willing to just walk blindly right into buzzsaws. So, yeah, and this is one of the reasons why I think that having exposure to stuff like that in a portfolio is important, if nothing else, just to shield you from inflation. Like we tell our clients, one of the best ways to shield yourself from inflation is to own things that benefit when those things that you need in your daily life go up in price, right? Like,
yeah, totally.
If you commute and spend a lot on gas, you should probably have exposure to oil and natural gas in your portfolio.
It's a trip. Talking to Zach Abraham, Chief Investment Officer, Bulwark Capital. I don't think people realize that. I always talk about to my kids this. You want to buy Nikes? Why don't we look at Nike stock? You want to buy some of these things? What are you using on a daily basis that may benefit you? And that's a perfect way to look at your portfolio, because I don't think people do that.
No. Well, and look, I spend a lot of money on research. We've got 3 full-time analysts, another portfolio manager, 2 full-time traders. So obviously I believe in that. But to go to what you're just saying, anecdotally speaking, the source of some of our biggest winners, especially in the consumer discretionary space or consumer staple space or anything like that, some of the biggest winners we've ever had has been watching the purchase habits of my wife, right? Especially my wife and now teen daughter. Okay, if they agree that a new brand or a new store or something else is really good and they like it and they've got their list of reasons why, um, we're not going to buy it without researching it. But for similar reasons, now ours is a little bit different because the average stay at home mom or the average mom period, even if it's a dual income home, um, has control over the vast majority of the family budget and way of the purchasing power, right? So there's that part of it. But also, like you said, if you want to find, um, Peter Lynch talked about it. Go walk around the mall and see who's got the biggest line going out their store. Something's going on there, right? So, yeah, that's definitely one of the tricks that we use on the retail space is, hey, go look at where moms or other people are excited to go. Go ask your teenagers, what's the coolest new store out there? Um, there's one out there called Aritzia. It's a publicly traded company up in Canada, and this is not me advocating that anybody buy it. We don't own the stock. We're still looking into it, but it's got new management, and all the kids all of a sudden know about it. They're all over it. My wife has started buying stuff from them because she's like, hey.
This is like the new Lululemon.
Yeah, but it's all basically online, right? And then you go look at it, and it's Canadian based. It's still, it's a $5 billion market cap, so it's got plenty of room to run. But again, that's just an example of how I'm not just saying that. We really pay credence to what the wives and the kids are spending on because there's real impact there, and you got to keep your finger on the pulse, man.
That's true. Talking to Zach Abraham, Chief Investment Officer, Bulwark Capital. We've got a couple weeks left till here we are. What are we? 3.5 weeks away from this thing kind of wrapping up because I still think whoever wins or loses, there's going to be lawsuits. I just don't sense that this thing's going to end on November 5th. The market unsteady. I look at it and I'm like, is it building in any nerves or is this just riding the waves saying, I don't really care who wins because we're just going to keep plowing on?
I think that's the way you have to approach it right now, and it makes a lot of sense. If you look at a lot of the economic activity, that's the way it seems to be pointing. And what I mean by that is you'll see significant factors, inputs change, price of oil, some rates here and there, all that kind of stuff. You look at the underlying data and it just doesn't blink. So to me, I think it's an economy and a marketplace that is just overwhelmingly telling you one thing, and that is that right now, it doesn't matter what the issues are. There's so much money and so much liquidity being pumped into the system that, bad things can happen. But as far as asset prices and market prices are related. Now, look, we could have a news headline where all of this changes on a dime, right? So I'm not saying, risk management is ever
like World War III.
Yeah,
Israel invades Iran and it sets off something. What does that do?
Right. Oh, well, look, man, you bring up a really good point. This is one of the reasons why I love where we're currently at. So many of the things that are underappreciated, the things that have the most, the cheapest stock prices, some of the cleanest balance sheets, ridiculously cheap stuff out there is all of the stuff that protects you the best traditionally, historically speaking, from those type of events, right? Go look at it. You and I have talked about it. It really is this. In my career, and I've seen this happen, that, when you see these holy unions of the thing that you want also happens to be the cheapest thing, also happens to be the thing that no one's making any more of, right? And all those stars align and they come together. Those are really sweet parts, or sweet options and sweet periods of time that come along very seldom. And I think that's one of the biggest advantages you've got in commodities right now. Some more than others, obviously, some companies more than others, and you got to be selective, but by and large, when you look at the discount that so many of these commodities, even gold, everybody's hot and buy. Do you realize right now, gold, Costco is selling $200 million worth of gold bars per month.
It's insane.
It's nuts, right? And so
you're selling platinum now.
Yeah, platinum and palladium are actually big. We're actually fans of it, and here's the reason why. So much of this lithium and cobalt has been built up to the unending demand of EVs, right? And that unending demand seems to be much more ending as opposed to unending, right? And so what that means is you've been drastically underinvested in palladium and platinum, which are very large inputs for ICE cars, okay, internal combustion engines. And that price is not at all reflecting. And here's the crazy thing. All these companies that are cutting back or getting rid of their projections or massively throttling back their projections as far as EVs that they want to sell, what are they saying that they're going to make more of instead?
Well,
right? Hybrids.
Hybrids,
right?
Yeah.
Okay. So hybrids are more platinum and palladium demanding than traditional ICE cars. So where everybody was over here chasing the lithium and cobalt thing, we were sitting there going, I think the money's to be made in platinum and palladium. And that seems to be happening right now. And you see, it's just so interesting. You see so many coiled springs under so many of these commodities and the sectors in which they trade. And when I say coiled springs, I mean so many things that, forget about whether you like it or not. So many things that unless the circumstances around these industries and around these stocks change, these things have to go up a lot, right? They're just the price, either the profit in those sectors needs to fall dramatically, meaning the price of those commodities needs to come down dramatically, or these things will go up. They're just too cheap. And they are also, in this kind of a long winding road to say, those are also the things that would benefit the most or protect you the most from a news headline like Israel going into Iran, right? Because, when the world goes to war, all those supply lines are threatened, right? It has a not dissimilar impact to the global economy in some ways than even COVID had, right? So those are the things that are going to benefit from it the most. And like I said, it's very rarely that you're looking out at the world going, hey, I see this big risk. The thing that I need to go buy the thing that would protect me the most. But then you go look at that thing and you're like, oh man, it already went up a lot, right? I missed my shot. That's not the case today.
Yeah, that's freaking awesome. Talking to Zach Abraham, Chief Investment Officer, Bulwark Capital. People want to reach out to you. They're like, dude, we like this guy. What do we do? How do we get a hold of him?
Yeah, pretty easy. Just Google Know Your Risk Radio podcast. You can go to bulwarkcapitalmanagement.com. You can find Know Your Risk Radio podcast on any podcast site. And we're not hiding, not hard to find. So yeah, reach out and hopefully we can help you out.
Right on, brother. Good to talk to you. We'll do it again next week.
All right, man. Sounds good. Thanks for having me.
Investment advisory services offered through Trek Financial LLC, an SEC-registered investment advisor. The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. Any references to performance of securities are thought to be materially accurate, and actual performance may differ. Investments involve risk and are not guaranteed. Past performance doesn't guarantee future results. Trek 24308.